And we are back dissecting the events of the Nairobi Securities Exchange last week. Turnover was down 54% week on week. Foreigners remained net buyers. The key stocks we're looking out for were equity, KCB, and East African breweries. Today we are sitting with Ashanti Advisory, the managing partner, Mr. KAMANDA MORARA. He's going to be taking us through what is he hearing from investors? What's the local investment sentiment looking like? And with equities at a 10-year low with regards to the NSE 20 index, is there value or is there no value? Mr. KAMANDA, welcome to the show.
Thank you.
Tell us, Ashanti Advisory, what does Ashanti Advisory do?
Ashanti Advisory is an independent financial advisory firm. We have two main branches of business. We do corporate finance, which is helping people raise capital. And we also do investment advisory. So we help people pick equities and fixed income investments that suit their appetite and their profile. Okay,
so you're really out there speaking to retail, institutional investors and high net worth and always trying to assess. What is the sentiment that you're getting out there with regards to investments? Where are people putting their money, where are the people choosing to pull their money out of?
Well, for the last few months, because of the performance of the equity market, a lot of my clients have been pulling away from stocks.
Okay.
A lot of them have been moving into fixed income investments. There's been a slowdown. Early in the year, the guys were investing in real estate, but there seems to be a bit of jitteriness with that as well.
All right.
And a lot of guys, I say, were just generally just moving over to fixed income.
Moving over to fixed income,
and money market funds.
And the bonds.
Yes.
All right. Before we get into just the crux of this whole investment cycle and what you're telling your investors to do, inflation numbers are actually out, and we saw a correction downwards to about 5% for August versus 6.27% in the previous month. Did you expect this? Have you looked at it? What are your sentiments around these numbers that have come out?
Well, I think it's a number of factors. First of all, oil prices have gone down. The price of, I think, both diesel, petrol has gone down significantly. As much as transport is a smaller component of our inflation numbers, transport drives a lot of numbers for everything else.
That's
it drives
true.
The price of food, it affects the price of a lot of things in Kenya. So because of that, because of the price going down, maybe that has had an impact.
Okay.
Then the weather seasons have not been as usual. I think we had a very dry patch in the whole of July. June was dry. Then it's raining suddenly.
Yes.
So I think the little rains have had an impact on agriculture, especially vegetables. And I think maybe that has had some effect on the inflation numbers.
Okay, and do you think it's actually going to remain at 5%? And I ask this largely because you've said your investors are moving into fixed income, and there's always a correlation between your fixed income return and inflation. Inflation is a very important number in that category, I want to assume.
Yes. Yes, it is, and I think it might rise slightly because I mean a lot of factors depend, again, as I say, on global oil prices.
Okay.
There's a lot of uncertainty in the Middle East.
Exactly.
So we don't know what's happening with the situation with Iran. If that escalates and oil prices go up, then of course we anticipate that's going to hit Kenya directly. Then with the rains again, we are having very erratic weather. So we might be having a bit of a fortunate period that you're having a bit of rain.
Yes.
But as soon as it goes back to the dry weather, we don't know whether that'll have an impact.
Okay.
And there are reports anyway coming out that parts of the country are already suffering from drought.
That's true.
So there's a risk that inflation might spike up.
It could spike up.
Yes.
But then do you think it gets over the 7.5% hurdle? Because central bank normally looks at it it gives it a range of 2.5 to 7.5%. Do you think we actually get out of this bounds?
It might happen. I mean, it's not happened for a long time, but we might just break that.
We might just get there.
It might just get there.
Okay.
I mean, a confluence of factors. Of course, if oil prices remain low, I think it might cushion us a bit. If we end up having rains, because right now weather is so erratic, then also that will have an impact.
Okay. I mean, it's also interesting when you're talking about, because I was going through the meteorological department, and their last note that was evaluating the rain from March up until April, June, said that the rain was not sufficient, but in the core breadbasket areas, it was actually adequate rainfall. And their outlook for the rain that's actually going through now, June, July, and August, which will determine the harvest later in the year, they said at least in the grain basket, it was actually going to be sufficient. Maybe there's a bit of concerns around the coastal area. So I think that's just something for us to just keep heads on to see the impact, as you said, on the food inflation.
Yeah, I think it's just something to keep tabs on.
It's just something to keep tabs on.
Yeah.
Okay, fine. Now let's come back to the investments. I like that you're saying your investors are getting out of equities and they're getting into fixed income. Why fixed income at this point in time?
Why fixed income? I mean, the reality is, I mean, the market has been on a downward spiral for almost the last 3-4 years.
Yes, it has.
So you have a scenario where guys literally feel their fingers have gotten burnt. And as I say, depending on their risk appetite, there are clients who, if they lose even 5-10%, it's a very big pinch for them.
Wow.
So a lot of them, it's not just a question of reallocation. I think some of them just feel they want to move to safety. And safety is where they are assured of their principal, and they're getting a small return.
Okay.
Yeah.
And that's fixed income for now?
And that's fixed income for now.
Is there any preference with regards to the tenor of the paper that they're actually looking at? Or what you're advising your clients to look at?
Most are looking shorter term because there's also the element of liquidity.
Okay.
Most people are also jittery about committing themselves. And I guess that's also had an impact on treasury bill rates. If you notice, the 91-day bill rate has fallen down to 6%.
It has.
Because a lot of demand for short-term rates. But now, because of that, what I'd recommend for someone to do right now, that's of course if they come to the market, then of course you'd want to buy longer-term bonds.
Longer-term bonds. What does longer-term mean for you? Is it 2 years? Is it 5 years? Is it 10 years? 15 years?
Looking 5 to 10 years
because
of the favorableness of the interest rates.
Okay.
If you buy something that is too short-term, the rates are too low.
All right.
Yeah.
Which means you're not telling your clients to actually subscribe to the 15-year that has reopened 2 issuances for 2018 and 2019.
Not all of them. I mean,
Yes.
it depends on their time horizon, because
Okay.
15 years, obviously, for some people is a long time.
Okay.
But as I say, most of my clients, by default, tend to have a bias towards having some element of liquidity. So
All
they're
right.
looking at shorter term tenor.
Okay, and I also like the element of liquidity that you're bringing about. So do you typically tell your investors to go directly or to go through money market funds? Because I know liquidity, if liquidity is a concern, you certainly won't be able to get it if you go directly to the government.
Yeah, absolutely. So I generally tell them to go through money market funds. Luckily, the funds offer options. So if you want to go to invest in the fixed income, you can still do that with some element of flexibility. If you have a very short-term horizons, there's a pure money markets. Those are offered by a number of players in Kenya, with varying interest rates.
Okay.
And I say for someone who has that very short-term horizon, that's where I'm directing them.
That's you're directing them. And what's the best interest rate that you've actually seen on some of these money market funds that are out there?
Yeah, some exceed 10%.
Okay.
The highest I've seen recently, when I'm talking about the stronger players, we're looking at about 10.5%. But it ranges. We're talking 10, 9%, some offer 7%.
Okay.
I'd say it's really ranging from 7 to 10.
7 to 10%. So if anybody gives you within that range, you know they're actually putting their papers directly into the Central Bank of Kenya, and you're happy with that?
Yes, I'm happy with that.
What about commercial paper? Because we have seen and heard of a couple of commercial papers that are in the market, but then the risk affiliated to this tends to be high, largely historical and legacy issues. What are you telling people, and are you seeing demand for corporate paper in your where you're seated?
I'm not seeing a lot of demand, I guess because the stories are very fresh.
Okay.
I mean, I'm sure you've read in the papers, Sanlam losing a fortune because they invested in I think at the river mining. I think the recent collapses of some of these companies have gotten people really scared.
That's true.
The yields are higher, obviously, but then we don't have also a lot of the blue chips issuing a lot of commercial paper.
Actually, it's only ABL that tends.
It's only ABL, so the market is pretty thin.
Okay.
So I think Kenol used to, but I don't see a lot of those now. Yes. So the idea is that there isn't even a lot of commercial paper out there. Okay. So I'll say also the options are a bit limited. Yes,
it sounds very limited because you're on one end you can only do short end, which is either money market or directly in the government, and on the other end you're actually exiting the NSE because you've been losing money for the last almost 4 years and it's on a 10-year low. So then what are you telling investors to do, and how is the liquidity situation? Are you seeing more money coming to you or less money coming to you compared to a year ago, for instance?
Compared to a year ago, surprisingly, money is coming.
Is it? Where's it coming from?
Well, just individuals, I guess, diasporans who are maybe attracted by the weakening of the shilling.
All right.
They're investing a bit more. And then I guess also there was that initial shock. As much as the market has declined, it wasn't as steep as the decline, say, between 4 years ago and 3 years ago. There's a very steep decline people really kept up. So right now you have cautious buyers, guys who are coming in who are looking for bargains.
All right.
Yes.
That's interesting. So then now are you actually getting the sense that we're near the bottom and you need to start coming back into equity?
Absolutely, absolutely. I feel we are bottoming. I mean, most companies, anyway, especially the stronger ones, they've still been reporting profits.
Okay.
They've been reporting a growth in profit, some of them double-digit profit growth.
Yes.
But then, even with that, the share prices have been going down.
Okay.
So what you're looking at is a scenario where valuations right now are extremely attractive. Some companies are trading below book value. Of course, the industrial companies, especially Kengen, Kenya Power, way below book value, like a fraction of book value. If you look at now price earning multiples, again, many blue chips are trading below 10.
Wow.
You know,
and
so
that's a good entry level for you?
It's a good entry level for
Okay.
Yes,
but then what assurance do you give somebody who's saying, why do you feel we are near the bottom? You've said one of the things that you're looking out for is the year-on-year decline. It's not as steep as it was 3-4 years ago.
Absolutely.
What else are you looking at to actually tell you we are nearing the bottom of this?
Well, what I'm also looking at, as I say, is the underlying performance of the companies.
Okay, underlying performance of the companies.
Just underlying performance.
Okay.
Of course, there are companies which, especially insurance companies, had a very rough year last year. They reported losses. If you look at half-year results, Britain reported a profit.
Yes.
So you're seeing a sort of a turnaround, especially in the insurance angle of things. Kenya Power, KenGen had serious challenges, particularly Kenya Power.
Yes. What are the challenges that we're facing Kenya Power?
Kenya Power, well, there's the issue of the last mile connectivity, which
Okay.
people say was not done profitably. And then obviously there's the issues of management being pushed out. And that obviously sent shivers to the market.
Certainly.
Yeah. Now we have a new management. Things are sort of stabilizing, I'll say. So some of these companies, maybe they've passed their worst.
All right.
And we are seeing prices which are unprecedented. For something like Kenya Power, I mean, they've lost more than 50%.
Well, in the last 1 year?
In the last 1.5 years, I'll say more than 50%.
And are they paying a dividend? Can you actually get a return outside of looking for a capital appreciation from a price?
I'll say KenGen didn't pay a dividend last year. We are hopeful they'll start paying. If they do, and if they keep it at the level of 50 cents, we are looking at a yield of almost 10%.
Oh, that's a fantastic yield.
Yes.
So it actually matches your money market.
Yes,
so
it does. It does
okay.
for some counters.
For some counters.
Particularly, I was looking at something like Longhorn, Kenya.
All right.
I guess that's the outlier this year. They have gone up almost 60%.
Wow. This is on price?
This is on price.
Okay.
And this is on price, and that is over the last 12 months.
Oh,
so saying,
is it retail or is it institutional demand that's driving this particular counter?
I'd say it looks like there's some savvy guys who the volumes are very low on Longhorn Kenya, so I'll say if a big institutional investor came in, it'll really jack it up.
Wow.
But Centum is an investor already.
Okay.
So I think there's some interest from the institutional side, but it could be a lot of it is the retail moving that counter up.
But is there something that the rest of the market is missing? Like really, what's changed in Longhorn over the last 1 year to actually warrant a 60% upside?
I suspect it could be the change in curriculum, the new curriculum that the government is putting up.
All right.
So if you're a publisher, then there's a possibility, obviously, of government requesting a lot of books.
Okay.
So I think there's that expectation.
So that earnings potential.
That earnings potential, because the earnings haven't changed much. Earnings per share was 68 cents compared to last year, which was 67 cents. So
okay, so nothing.
No big change.
So maybe in the 3 to 5 years, maybe that moves probably to about 80 or closer to 100 rather than, okay.
Yeah, but then you just talked about yield. They announced a dividend of 52 cents. So on a share price of 7,
yes,
you're looking at about 7%.
Okay, that's also a very good yield as well.
So it's also good.
Okay, so Longhorn, and then Centum that holds Longhorn. Is there anything in Centum that the market could be potentially missing out on?
Centum is like what? Centum is a private equity company.
Yes, it is.
In my view. So the idea is that I'll invest in Centum because I'm looking at stuff that's not available in the market.
Precisely.
I wouldn't say that I'm too on top of their current strategy.
Okay.
They've gone into schools. Schools are big.
All right.
Especially with the young people coming up now. They've gone into a private school. They're going into agriculture as well. Those are the unique things that they're doing that not many people are doing. And Centum has, of course, had a track record of identifying gems and selling them off. Now, the issue is, will they continue with that track record?
That's very true. That's very true.
We don't know for sure. But they've had that track record. They've done well on some. They did very well with UAP. They did well with Kabasid. So the jury's out. The jury's out on that. The only thing I'll go into them if as a way of balancing, in fact, because the idea is that I don't think the Centum tracks the general market.
That's
to
true.
me, it's more like a PE firm.
It is.
That is trading.
It is.
That someone can buy.
Okay.
And it reflects their share price hasn't really moved.
No, it doesn't. It's always trading at a discount to its net asset value, and it feels like the market keeps penalizing them for any little mistake that they make on actualizing their investment opportunities. So there's always that disconnect with regards to this is what they keep doing to enhance net asset value. And I think, as you said, maybe the jury is out on that because they certainly have to start paying a higher dividend to actually warrant that discount being corrected. At least that's really what we've had. So we've talked about Longhorn and we've talked about the electricity sector, and it seems that you actually prefer KenGen over KPLC.
I prefer KenGen over KPLC, but structurally, because at the end of the day, KenGen is the supplier. Okay. KPLC is a seller. Now, KPLC, of course, has benefited over the years because they've been mandated to be the only distributor of power. But we are seeing a scenario where, especially in Naivasha, KenGen is going to be allowed to sell power directly to industrial users. Do any laws need to change, or is that already factored in? Because I know there's a bill that's actually out there
which should be...
I suspect there should be a legal change,
Okay.
but very likely it'll just go
It's
through.
more or less done.
It's more or less than I'll say.
All right, I like
Yes.
this. Now we have Longhorn and we have Kengen. We'll just take a brief break right now. The NSE has just closed. Look out for the closing bell. Don't go anywhere. We already have 2 stock picks for you, Kengen and Longhorn. I can't wait to hear what else we have to do, we have to actually look into. See you in a bit.